How's it going, guys? In the last video, we talked about the short trading period skill called stochastic relative strength. Now, for today's video, we will talk about the moving average convergence and divergence, MACD, which is commonly used in stock exchange. From now on, I will provide more concrete contents about real-time trading for you, since it is more related to hot topics. So, subscribe to our KuCoin YouTube channel and smash that bell button to follow our future updates. Let's first take a look at today's table of content. We will discuss three topics in this video. Firstly, I will bring you a brief definition of MACD. Then, we will understand this new term by using our KuCoin trading system. Lastly, I will provide you with trading skills with some classic trading examples. Let's find out. So what is moving averages, convergence, divergence? As the name suggests, MACD consists of two indicators, trend indicator and momentum indicator. In this way, we can learn more information from MACD regarding trading and momentum. As we mentioned before, we can use the crossover as a tool from trading indicators such as moving average and data standards from momentum indicators such as relative strength index. So physically, you can discover both of them in MACD. However, MACD indicates these new terms in three ways: MACD line, signal line, and histogram. In technical analysis, we don't need to figure out the meaning of these new terms, but need to know how to use them, which we will discuss in the next slide. Voila! Let's read MACD in KuCoin trading system. Firstly, we will find this indicator on the trading button. Then you have to click this button and edit the format of this new indicator to have a clear MACD chart. Normally, you will find two lines moving up and down with a bar chart around the number 0. The line that moves faster is signal line and the other is MACD line. The bar chart is histogram. In general, MACD line and the signal line are a pair of trading indicators. Then, the histogram is the momentum indicator with important data 0. So, how to use MACD to get the both information from trading and momentum? To make you guys more easily understand this indicator, I will discuss MACD in different market trends. Firstly, if the market trend is bullish, you'll find that both the slow line and fast line moves above the 0 and the fast line will go through the slow line from bottom to top one after another. In addition, if the market trend is bearish, you'll find that both the slow line and fast line go below the data 0 and the fast line will go across the slow line from top to bottom in succession. Then, how about the reversion of market trends? In this condition, we will talk about some trading classic examples. If the market trend is bearish but you discover that the histogram is not deteriorating, that indicates that the calling party is accumulating. In contrast, if the prices is in high position and you'll find that the histogram is contracting, this is a hand to draw. With this skill, let's try to analyze the price movement of a trading pair of Bitcoin versus USDT. From this chart with daily trading period, you'll find that the Bitcoin's price is about 47,665, but its histogram is contracting. This is the hand to draw, so you have to show your profits to save investment. Also, let's see the quotation in this week in Bitcoin Cash versus USDT with the 4-hour trading period. You'll find that even though the price is decreasing, but its histogram below 0 is contracting, it is a hand to call. Now, before we end this video, let's quickly make a recap. We have discovered three topics in today's video. Firstly, we know what MACD is, consisting MACD line, signal line, and histogram. Then we read it in KuCoin trading system and reviewed some trading pair such as Bitcoin and Bitcoin Cash. That is all for today's video. From now on, we will learn more concrete skills by applying them to KuCoin trading interface to resolve your confusion about trading. Happy learning and happy trading with KuCoin. Hi guys, have you participated in our KuCoin future trading activities? Did you find it difficult to identify the market trend in current market conditions? It is because that the market moves slowly and the price moves sideways. So, are there any possible trading strategies to the current market conditions? My answer is yes. We will learn the Bollinger Bands, which is efficient to trade. Subscribe to our KuCoin YouTube channel and smash that bell button to follow our future updates. Before we start with the main contents of today's video, let's take a quick look at today's table of content. We will discover 3 topics. Firstly, we will discuss about the definition of Bollinger Bands to give you a virtual description of this new term. Then, we will learn how to read Bollinger Bands in KuCoin to help use this indicator in KuCoin trading interface. Last, I will provide you with trading strategies and some trading tips to adapt your financial position to current market conditions. So, what do Bollinger Bands look like? Physically, Bollinger Bands consist of 3 parts: the moving average, which is a middle band, an upper band, and a lower band. The moving average is a trading indicator, and as we discussed before, we can identify the market trend by this, but of little use in consolidation. The upper band and lower band are a pair of indicators which are used as standard deviations. It means how the price's volatility looks like. In short, this pair of indicators looks like the resistance and support lines. In technical analysis, and as I mentioned before, the prices bounce around between the 2 bands. Let's watch the video and give you a clear description of Bollinger Bands. With Bitcoin quotation, we will find Bollinger Bands under its 2 derivatives, Bollinger Bands % B and Bollinger Bands YF. First, let's figure out the Bollinger Bands. Bollinger Bands % B and Bollinger Bands YF are calculated from this indicator. After editing this indicator, we will have 3 bands here. As we mentioned before, we can use the middle band to identify the market trend. Here, we can also use the convergence and divergence to identify the sideways, the consolidation, and trend. Bollinger Bands will converge if the prices move sideways, which means low volatility. If the price moves in a way, Bollinger Bands will diverge, which means high volatility. We will find that Bollinger Bands will diverge and converge in succession as the prices moves into different trends. Now, how to trade with Bollinger Bands in KuCoin? I will bring you 2 trading strategies and some trading tips. Firstly, we must work out in what conditions Bollinger Bands are efficient. Normally, Bollinger Bands are used by the technical traders in consolidation. It is because that the prices will touch the upper and the lower bands one after another. The upper band will be used as hint to short and the lower band will be regarded as hint to call. However, if the prices moves into a definite way, we barely find any entry points from this indicator. In addition, as we talked about before, Bollinger Bands will diverge and converge in succession. This phenomenon is called Bollinger Squeeze. When the market becomes too slow, Bollinger upper and lower bands will become very close to each other. However, we all know that the market will not remain calm forever. The strong movement follows the slow market, and strong movement is very profitable if we enter the market on time with a very tight stop loss but a wide target profit. The key is to find a breakout point. Here, combining the skill that we learned, we can find the breakout signal in Bollinger Bands. But double check with the candlestick analysis. If you find that the trend is about to stop, the price will come back across the Bollinger Bands. But don't forget to double check by the candlestick analysis. Now, before we end this video, let's quickly make a recap. In today's content, we discovered 3 topics. First, we know Bollinger Bands have 3 parts: the moving average, the middle band, and pair of indicator, upper band and lower band. They define the volatility of prices. Then, we read this indicator with the help of KuCoin trading interface. Last, we used this indicator to analyze the potential entry points in consolidation, which is followed by the strong movement. Now, Bitcoin prices move sideways. I suggest you guys wait for a strong movement by using the breakout point and double check by candlestick analysis I told you in previous sessions. In next session, we will learn about parabolic SAR. I hope you guys enjoyed this video, and please give us some comments. See you next time. Hi everyone. From this video, we will continue to learn some typical candlestick patterns. These patterns will be more precise to show the reverse of market trend. In this way, you can practice using this technique to analyze different trading pairs and double-check the indicators that we have learned before. Subscribe to our KuCoin YouTube channel and ring the notification bell to get more info on cryptos. Let us first check out today's table of content. Unlike previous videos, we have to discuss 2 terms in total in today's video. In this way, I will firstly bring you the definitions of double tops and double bottoms. Then, we have to figure out these terms in Bitcoin trading pair with the KuCoin trading system. Last, I will bring you some practical trading skills in the situations that you will encounter in double tops and double bottoms. So what is double top or double bottom? Normally, these are typical reversal market signals. Double tops appear at high prices, double bottom show at low prices. In addition, there are not typical candlestick charts for double tops and double bottoms, since the market movements are randomly formed by the long and short parties. We will discuss this topic in the next slide in detail. When we enter the panel of KuCoin spot trading, we will see the candlestick chart of Bitcoin. Without clicking any indicators, we need to identify the primary trend by using the high and low points from Dow theory. Normally, we will find double tops at high prices and double bottom at low prices. However, as we discussed previously, there are not typical candlestick charts for both. For example, from February to May 2021, this pattern contains 4 tops. To me, this pattern belongs to double tops since they are very similar to each other and are both reverses of a market trend. Another example is shown from October to November 2021. This chart is more typical than the former. Also, the double bottoms can be converted into a more complex pattern. For example, this pattern included many candlesticks with very long tails, which may confuse you to some extent. In this video, we will still talk about double tops and double bottoms, but we will learn how to make the trading decision. As we talked about before, double tops and double bottoms may convert into the more complicated charts. Do we have similar trading skills to make the deal? The answer is yes. It is because that no matter how many tops or bottoms the chart will have, we only focus on the last 2 of them. For example, we picked one complicated double tops from February 2021. We can identify the neckline when we figure out this chart and the last 2 tops. This line is the parallel line crossing through the low point near the last top. Normally, technical traders always set up the price to short at this point of this line. The reason is that this neckline is the support level. If the price is lower than this level, the short party will be increasingly stronger to push the prices into another lower level. Also, from this double bottom chart, we will set up this neckline as the limit buy price. Moreover, we can see from this chart, it is hard to set up the stop loss price since this stop loss price is comparably large if we set the retracement at the target stop loss point. Before we end this video, let us make a quick recap. This video told us two reversal charts, double tops and double bottoms. Normally, it is hard to find typical charts, but we can categorize the similar charts into them and use the neckline as the limit price to buy, to short, in order to follow the new primary trend. In addition, the stop loss price is so large in this situation that it is better to hold the financial position a little bit longer until the prices move into a certain direction. That is all for today's video. I hope you enjoy it and identify double tops and double bottoms in the future. In the next video, we will continue to talk about candlestick charts such as head and shoulders, cup and handles. Don't forget to subscribe to our KuCoin YouTube channel and see you next time. Hi guys, welcome to our technical analysis tutorial in KuCoin channel. Today, this video aims to give you a brief introduction to technical analysis. If you have interest in technical analysis or just want to try trading on KuCoin, you can't miss out on our future TA tutorial for beginners. Subscribe to KuCoin YouTube channel and smash that notification bell to follow our future updates. Maybe you have viewed a couple of KuCoin channel videos about how to register a KuCoin account and make profits from our KuCoin trading bot as passive income. In this session, we will explain TA in simple terms, and you will be able to apply what you have learned to future day trading. We have planned to deliver a set of contents related to technical analysis. This includes, but not limited to, Dow theory, trend analysis, and candlestick analysis. Other contents such as money management and risk control will be also included. In order to make people more easily understand this tutorial, I will make a summary at the end of content for each session and announce the next session in advance. In this first tutorial, three issues will be discussed. What is technical analysis? Why should we use technical analysis to predict crypto price trend? The comparison between fundamental analysis and technical analysis will be discussed. This discussion endures for a long time. In the end, this video will show you which analysis is appropriate for crypto trading. Maybe you have found answers from other videos, but I believe that KuCoin channel will offer you a better and new view of crypto trading. Let's start. So what on earth is technical analysis? Theoretically, technical analysis is the subject of studying market behaviors or price actions. Technical analysis supporters always use it to predict price trend. However, no matter who you are, amateurs or sophisticated in trading, you will find this definition so unintelligible. In this way, I shall give you a new way to understand technical analysis. It is the subject of studying results of market movements. These results can reveal market sentiment, which party is in the dominant position, or which party is in a bad situation. Meanwhile, one financial instrument's price is determined by the dominant party, and technical traders are very interested in it. So why should we use technical analysis to predict crypto's prices trends? Firstly, we should admit that cryptos have investment value. It can be regarded as a financial instrument, which means we can make profits from it, such as income or arbitrage. In addition, technical analysis has three premises. Market action discounts everything. That means market movements derive from all kinds of information, such as fundamental information, political news, or psychology. Price moves in trends. That means prices will change in only three trends: ascending, descending, or just fluctuates. History repeats itself. That means the future is just another edition of the history, and what we can learn from the past can be used to predict the future. As technical analysis has these qualities, Its supporters can constantly make profits from all kinds of financial instruments, such as stocks, financial derivatives, or cryptos. By the way, these premises derive from the Dow theory, which we will discuss in the next session. In the end, in terms of the comparison between fundamental analysis and technical analysis, as I mentioned before, technical analysis is about studying results of market movements. Conversely, fundamental analysis is about studying reasons of market movements, such as market value theory. In the market value theory, fundamental analysts believe that values determine prices. In this way, they will concentrate on analyzing causes. However, for technical traders, they don't care about causes. All they focus on is market outcomes. If you trade as fundamental analysts, you will make mistakes such as selection bias. For example, if Fed raises interest rates, the crypto prices may rise, go down, or just fluctuates. And there's not definite relationship between interest rate and crypto prices. If you still believe that the crypto prices will go down, your possibility to win is only 1/3, not 100%. In addition, prices movements are ahead of all economic indicators. In this way, printed economic indicators won't affect the market again. This is one of the reasons why technical analysis supporters are very confident. If you are still watching this video, congratulations! You have crossed the threshold and entered a new world of the crypto trading. Like I said before, I will make a summary for you. From this page, you can see the gist of this video. The first is about the definition of technical analysis. It is a subject of studying the results of market movements. In addition, these three premises can make technical analysis efficient during the crypto trading. Firstly, market movements discount everything. In addition, price only moves up, down, and fluctuate. What is more, the future is just another edition of the history. Hope you find this video helpful, and if you like our content, hit the like button and subscribe to KuCoin YouTube channel. And if you have any questions about the content, please leave us a comment below. In the next session, we will discuss the core theory of technical analysis, Dow theory, from which the trend analysis derives. Thanks for watching, and see you next time. Hi guys, welcome to our KuCoin YouTube channel. Today in this video, we will discuss the Dow theory. As we have talked about the definition of technical analysis in the last tutorial, in this tutorial, we will bring you a specific image of the core of the technical analysis. So please subscribe to our KuCoin YouTube channel and smash that bell button to keep following our future updates. As usual, to make people more easily understand in this session, I made a table of content for you, and there are three main parts in this video. Firstly, I'll explain what the Dow theory is. Then, what are other Dow theory's characteristics can tell us in crypto trading. In the end, I'll make some trading tips from Dow theory for you. From now on, the tutorial may contain lots of pictures, and these pictures may include too much information, so it may confuse you. Therefore, I will make a summary at the end of content, and I may consider uploading my PowerPoint slides for you. So don't worry about missing any information, okay? Shall we start? So what is Dow theory? As I mentioned before, the Dow theory is the core theory of technical analysis. The author Charles Henry Dow has made this theory. In his theory, he has viewed lots of stock prices for decades and written down his observations. In his observations, he made a conclusion of two main market characteristics. One is about bullish market, the other is about bearish market. From this page, you can clearly see that if the market is bullish or is in the uptrend, price moves like this.
It moves from the low point to the high point, but then drops to the higher low point, and in the end, it moves to the higher high point. From this page, you can see that if the market is bearish or is in the downtrend, you will know that the price moves like this. It drops from the high point to the low point, then ascends to a lower high point, and in the end, it drops to the lower low point. Although the market contains three trends: primary trends, secondary trends, and fluctuations. From this picture, you can clearly see that primary trends contain secondary trends and fluctuations. Secondary trends could change primary trends in some cases, and this we will discuss later. You may not find any fluctuations in this picture, right? Don't worry, it's just because this picture is oversimplified and you can see them in next two candlestick charts. In terms of time dimensions, primary trends can last for a very long time. In the crypto trading, some products such as Bitcoin, its primary trend can last for over 2 months. In this picture, you'll find that I made a square for you to sign its primary trends. This primary trend lasted for 77 days, more than 2 months. Secondary trends or secondary reactions can last for a couple of days. Secondary trends are also called retracements, and in this picture, these secondary trends lasted for 8 days, more than a week. Fluctuations in this picture are just like serrated blades. They are white noise and unimportant market movements, but they are very misleading. Normally, people can make right decisions from it.
If you intend to use these trends to predict price trends, my point is primary trends and secondary trends are very necessary, since primary trends can be used to determine the market is bullish or bearish. Secondary trends or retracements can be used as the entry prices, and this we will discuss in next session, so don't miss out. So what are other characteristics of Dow theory? Firstly, trading volume is a very important indicator of when the market is bearish or bullish. It is a very important sign to double-check the market. If the market is bullish, the core volume is increasing. If the market is bearish, the short volume is increasing. As you can see in this picture, the green arrow shows the market of ascending and the red arrow shows the market of descending. In addition, only defined reverse signal can be regarded at the end of the trend. From this picture, it is obvious that from A to F, it is ascending of primary trend. However, the point H has revealed that the ascending of primary trend is changed. Since after retracements, this point didn't touch a higher point but became a lower high point. It is the definite reverse signal. In this way, the whole market has high possibility to be bearish. In this part, I will make you some trading tips if you intend to use Dow theory to determine your primary crypto trend. Firstly, you should choose the right time cycle. And my point is, 4 hours is appropriate. After having chosen the right time cycle, you can use the high point and deep point to determine your primary trend. But remember, the larger time cycle you use, the longer time you will use to make profit. In the end, I will summarize this video. Dow theory provides us with 2 main powers. One is to determine the market is bullish or bearish. The other is to determine 3 different kinds of trends. Other characteristics related to the Dow theory is trading volume and inverse signals. These are separately used to double-check the trend and change in trend. In this way, I will recommend you guys to choose the right time cycle to determine the primary trend, and please remember, the larger time cycle you choose, the more time you will spend on making profits. And this is the end of this tutorial, and if you have any questions, please give us comments below. We are very looking forward to your comments. Next session, we will talk about the support levels and resistance levels. These levels are just another way to express the trend based on Dow theory, and we will talk about how to trade with this help. So thanks for watching. See you next time.
Hello guys, welcome to our KuCoin YouTube channel. After having learned about the definition of primary trends and secondary trends in last tutorial, today in this video will bring you more practical details and practically complete this theory. Subscribe to our KuCoin YouTube channel and smash that notification bell to follow our future updates. Now let me introduce some contents. Today we will discuss some new terms: support, resistance, retracements, and Fibonacci. Also, some trading tips will be added after introducing these terms. With the knowledge I've told in last tutorial, I'm sure you will very quickly understand this video. So if you have any questions, please leave us comments below. Shall we start? So what is support and resistance? Firstly, please look at the picture that I've shown in the last tutorial. You can easily find that the market is bullish and it contains primary trends and secondary trends, right? Now I intend to add some new terms in this picture. Voila! You can figure out that the high points and low points are turning into resistance levels and support levels. Now we can imagine that price is a bull, bounces between the resistance levels and support levels. The reason why the price is supported at some level and why the price is resisted at some level are that if the price ascends to some level, the people with short position will dominate the market and the price then drops. However, if the price descends to some level, the people with long position, which is stronger than that I mentioned before, will dominate the market again and pushes the price into a higher resistance level. Price action from the resistance level to support level in the bullish market or from the supported level to resistance level in the bearish market is called retracement, which is also called the secondary trend that I mentioned before. The retracement is a sign that we can make arbitrage based on identifying the market is bullish or bearish by Dow theory. In this way, we need a threshold that helps us identifying the entry prices. Fibonacci has given us a set of percentages of retracements. But before we talk about that, we should know that Fibonacci believes that within retracing 61.8 of price between resistance levels and support levels, the whole trend is healthy. However, if the trend retraces more than 61.8% of price, it is highly possible to change. Also, it believes that 23.8%, 38.2% are very exact ratios that we can use to enter the market. Don't worry, I will explain that in detail in next page. So how to trade cryptos by using supports, resistance, retracements, and Fibonacci ratios. From this page, I have simplified the primary trend for you, and if you have identified primary trend, you must wait the appearance of secondary trends, because this is the price you intend to buy. The entry price depends on the price patterns that we will discuss in candlestick charts tutorial later. But in this picture, it is highly recommended to use the price calculated from Fibonacci ratios. After that, the stop loss price is necessary to set up before you enter the market. From Dow theory, if the retracement moves at supported level price, it is highly possible to change. In this way, the stop loss prices should be set at the supported level prices. The take point price can be set as the resistance level price if the trend is going up. Also, you can set it far more away from the entry price before the trend is changed, such as at the orange circle. At the end of this content, I made a summary for you, and this time I will explain it with a picture. This video offers you 3 new terms. Support is like selling, and resistance is kind of flow during the price trend, and the retracement is secondary trend, and it is highly possible to be 23.8% and 38.2% of the price between the resistance level and support level. Fibonacci creates 3 kinds of ratios, and the entry price could calculate it from these ratios, and other price patterns could determine the entry price. And this we will discuss later. In this picture, you can clearly see that the stop loss price is set at the supported level price, and take profit price is set at least at the resistance level price. Next session, we will discuss about the candlestick related parts, and I will make some brief introduction to some price patterns, okay? So if you have any questions or just want to give us some feedbacks, please don't hesitate to leave us some comments. See you next time! Hello students guys, welcome to our KuCoin YouTube channel. Remember what we talked about in last video? Yes, in today's video we will discuss about the Japanese candlestick charts, and I will give you more detailed charts to complete your trade analysis. So before we start the content, please subscribe to our KuCoin YouTube channel, smash the bell button, and don't forget to like the video if you feel it's valuable for you to trade on KuCoin. So let me first introduce the table of content. To make people more easily understand the Japanese candlestick charts, I split this content into 2 videos. Therefore, I will bring you related content about the definition of Japanese candlestick charts and the justification why should we only focus on 3 candlestick charts in the first video. In the second video, I will give you more detailed information about what are these 3 candlestick charts. So let's begin. The Japanese candlestick, as the name suggests, is made by Japanese researchers. You will have to remember who has created this, and you should focus on this. It is a chart that we use to discover the market sentiment. Also, one candlestick shows 4 data: opening price, closing price, highest price, and lowest price. Remember this, one candlestick can last 4 different time durations. Therefore, the time cycle that I suggested in the last video is extremely helpful during the trading, and we will integrate these functions later. From this picture, we will see that there are 2 colors showing different candles. The red one reveals the bearish market, the green one shows the bullish market. Both the red candle and green candle have shadows and real bodies. Therefore, you will see that the up shadow in the green candle reveals the highest price. The lower shadow shows the lowest price. The real body shows the opening price and closing price. The only 2 differences of these candles are the locations of opening price and closing price, and of course the colors. The cause of these differences is that the price actions of these 2 different candles are excluded. The one is from the bottom to top is bullish market, of course. The other one is from top to bottom is bearish market. If you are still confusing what I'm talking about, don't worry, I will give you some tips at the end of the content in the summary parts. As I mentioned before, in next video, I will give you 3 candlestick explanation, but firstly, let's know what they are. They are pin bar, harami candles, and engulfing candles. These candles are only 3 ones that we should focus on, and why should we do that? In this video, I will only give you 3 reasons because they are easy to understand. Firstly, there are too many books and researches about candlestick analysis, and most of them are very difficult to read. You don't have too much time to read all of them, and most of them are not efficient and effective for your trading. In addition, as technical traders, what you should do is increase your possibility to win. In this way, what you should do is focus on the most efficient and effective way to repeat. What is more, pin bar, harami candles, and engulfing candles are basic charts to integrate other charts in the different time durations. In this way, as an experienced trader, I recommend you guys to thoroughly understand pin bar, harami candles, and engulfing candles. Now, I will summarize this video and give you some tips to understand Japanese candlesticks. Firstly, like I said, Japanese candlesticks are revealing a market sentiment. Also, it has 2 main parts, red bodies and shadows. In my view, red bodies are more important than shadows, since red bodies are showing the extent of dominant party. The larger red bodies are, the more extent of dominant party is. As there are too many candlesticks out there to be understood, I recommend you guys to only focus 3 of them. They are pin bar, Harriman candles, and engulfing candles. This is the end of this video, and in the next video, we will discuss these 3 important charts in detail. With the help of this chart, you guys can identify the entry price to enter the market, and we will integrate these functions later. See you next time. What's up guys, welcome to our KuCoin Technical Analysis Tutorial 2022. Have you seen my last video? In the previous video we have discussed what a candlestick looks like, and in this video we will still discuss the definition of 3 important candlesticks. So if you have ever seen some videos on our KuCoin channel, please subscribe to our KuCoin channel and smash that notification bell to follow up future updates. Today, we will only focus on 3 important candlestick charts so that you will find less content in this table. However, in our later videos, we will repeat discussing these charts in different aspects, so don't worry if you find you are the first to realize these new terms. Shall we start? So let's talk about what the pin bar looks like. As the name suggests, the pin bar looks like a pen, and its tail is so long that its length is 2 times larger than that of its real bodies. Also, the color of the pin bar makes no difference. So we commonly ignore the color of the pin bar. However, the direction of the pin bar's tail is very important. In this way, we will have a bullish pin bar when its tail points down and a bearish pin bar when its tail points up. In addition, a bullish pin bar always shows up after the descending trend, and a bearish pin bar always shows up after the ascending trend. What is more, it is very normal to have noses in a pin bar, and you won't be confused since the pin bar's noses are normally short. In this way, it won't be a pin bar if its noses are too big. Secondly, what is a Harriman candle looks like? Harriman means pregnant in Japanese. In this way, there are 2 different colors of candles in one portfolio of candles. The larger one is like the mother, the shorter one is like the child. Normally, the mother candle's real body is larger than the whole bodies of child candle. Also, as Harriman candles contains 2 different colors, therefore it is a sign of changing of market sentiment, and the power of formal dominant party is weakened or shrank. So, as seen in this picture, we will find there are 2 different kinds of Harriman candles. The one is bullish and the other one is bearish. So how to identify which one is bullish and which one is bearish? It's very easy to find out the answer. You just need to figure out the mother candle is bullish or bearish. So if the mother candle is bearish, then the whole portfolio of candle is a sign of bullish market sentiment. If the mother candle is bullish, then the whole portfolio of candle, that is Harriman candle, is a sign of the bearish. That's it. Suddenly, what is engulfing candle looks like? To me, engulfing candles and Harriman candles are just like our left hands and right hands. Why am I saying that? From this picture, you can easily find that if the left candle's real body engulfs the right candle's whole body, then it will be Harriman candle. If the left candle's real body is engulfed by the right candle's real body, then it will be the engulfing candles. It is the only difference between Harriman candle and engulfing candle. Also, there are 2 different kinds of engulfing candles in this picture, and how to identify them. You can use the same way of Harriman candle to identify the engulfing candles. That's it. If the left candle is bullish, then the whole portfolio is a sign of bearish market sentiment. If the left candle is bearish, then the whole portfolio is a sign of bullish market sentiment. That is very easy to figure out. So at the end of this video, I intend to give you a summary to these 3 different kinds of candlesticks. Firstly, for the pin bar, please remember its tail's direction and its position in one trend. For example, if one pin bar's tail points down and it's in the bearish trend, then there is a warning to change to the bullish market. don't make a first orange color, and their noses are normally short. In addition, Hermit candle and Galvin candle are just like our left hands and right hands. The intelligent you may find there's a tiny difference between them. That is, in Hermit candle, we compare real body to the whole body. However, in Galvin candle, we just compare real bodies. The reason for that is the real body is more important than the whole body to one candlestick, since the real body is a sign of definite extent of power to dominant party. In this way, if the lead candle's real body is big enough to sign to change, then there's no need to use the whole body to compare the former candle's real body. Now it is the end of the whole video. I hope you find this video helpful when you intend to trade cryptos. In the next video, we will start another new part about how to draw the trend lines. So if you have any questions and feedbacks, please leave us comments, and see you next time. Hey guys, it's been a week. How's your trading? Did you earn lots of money? In today's video, we're going to talk about the trend line. It is extremely important for you since it is a fundamental skill to identify different candlestick patterns. Subscribe to our KuCoin YouTube channel and smash that notification bell to follow our future updates. So let's find out today's contents. In today's video, we will focus on two things. One is to understand the trend line and the trend channel and how to draw it. The other is how to trade with the help of trend lines. As we have discussed how to trade with identify the primary trend, and in this video, I will give you more details, and this will furthermore complete the trend analysis. Firstly, what is trend line? Actually, you will not find any trend lines in a candlestick chart. Since the trend line is just a kind of auxiliary line, we do make the trend lines by some particular standards. From this picture, you will see that there are two kinds of trend lines, up trend line and down trend line. You must be very familiar with these trends, right? These are what the trend line looks like. So how to draw them? Firstly, you should identify the trend. As we have mentioned before, you can use the continuous high points and low points to identify the trend. If you encounter the bullish trend, please connect the low points or retracement points, then you will get a bullish trend line. If you identify a bearish trend, please connect the high points or retracement points, then you will have a bearish trend line. Secondly, what is a trend channel looks like? As the name suggests, a trend channel consists of two parallel trend lines. As I mentioned before, there are three kinds of trends in crypto markets. They are upward trend, downward trend, and fluctuations. In this way, we will have three kinds of channels. They are uptrend channel, downtrend channel, and fluctuation channels. So how to draw them? Let's watch the first photo. This is an uptrend channel, and to get this channel, we have to connect both higher points and lower points. This also adapts to the downtrend channel, as you can see from this picture. Thirdly, fluctuation channels contain lots of patterns, but I only provide three main patterns that we will discuss later. So you can first know what they look like in this session. In addition, how to trade with the help of trend lines. As we mentioned before, if we have identified the trend, we just need to follow the trend and trade at the retracement point. In this session, I intend to add something else. We trade by following the trend when the trend ends, and we can also trade by the reversal signals. This is called the breakout trading. We will discuss the breakout trading in different price patterns later, but in this session, we will firstly introduce this term to you. Also, the entry price is the price of hard point of reversal signals. In this way, please look at the first picture of KCS to USD candlestick chart, and you will see there is the red uptrend line. This line is broken by a candlestick with a very long red body, which means a strong power of shooting. This is also a very strong reversal signal, and the entry price is the price of the half point of the former red candlestick. So theoretically, you can shoot at this price in the next green candle. And you can also call the profits at Harami candles in the green circle, which is a strong sign of changing, which we have talked about in the last session. So let's look at the next picture. You will see that the red line is bearish trend line, and it was broken by the green candle with nearly no tails. It is also a very strong reversal signal, since we have discussed before, the longer the red body is, the stronger of power of the dominant party is. So we can call at the price of the half point of this green candle in the next candle, and we can show the profits at the engulf candles. Don't forget to set up the stop loss price at the lowest price of this strong green candle. At the end of this video, I had made a summary for you. In this session, we have completed furthermore the trend analysis. Before, we have learned how to identify the trend, and now we have learned how to draw the trend lines by connecting the high points or low points. Then we will have the bullish trend line and bearish trend line. In addition, we will get the trend channels by connecting both high points and low points. If the price breaks the trend line, the former trend is highly possible to change. Then we will use the breakout trading to follow another new trend. Normally, the entry price is the price of half point of reversal signals, and the stop loss price is highest price or lowest price of these reversal signals. This is the end of this video, and in the next session, we will still discuss the Fibonacci ratios, since we have received lots of feedbacks that some of you still don't know how to use the Fibonacci ratios in KuCoin trading platform. I will teach you in the next session, and see you next time.
What's up, dude? In last week, we have witnessed a big crash of Luna, and as we talked about before, reversal market signals are very important to identify the change in market trend. So did you protect your investment from that big crash? In this video, I will add some more content related to hot topics which the market concerns. So I hope this content will help you save your investment from high volatility of crypto markets. Subscribe to our KuCoin YouTube channel and smash the bell button to follow our future updates. As usual, let's first take a look to the table of content of today's video. We will talk about three topics. The first one is about Fibonacci retracement levels, which we have discussed before. But in this session, I will give you 4 detailed levels to complete your understanding of Fibonacci retracement levels. Then, we will use our KuCoin trading platform to draw the Fibonacci retracement levels. And I prepared several examples to strengthen your memory so you can instantaneously use it during your crypto trading. In addition, I will provide some trading tips for you when you encounter a bear market. This content will be a repertoire in our KuCoin TA videos. So, what are Fibonacci retracement levels? In terms of technical analysis, people commonly define 4 different retracement levels as Fibonacci retracement levels. So what are these retracement levels telling us? The first retracement level is 0.236, which means that the trend is pushed by the high trading volume, and this is a strong signal to follow the trend. The second retracement level is 0.382, which is less important, since the market will move on to 0.5 retracement level. The third retracement level is 0.5 retracement level, which is introduced by the Dow theory and is commonly used as the entry price. The fourth retracement level is 0.618, which is boundary retracement level, since if the retracement is larger than 61.8%, and it is highly possible to change. Therefore, the retracement level between 0.382 and 0.618 is normal for a market trend. So how to draw Fibonacci retracement levels? It's very easy since our trading platform has the definite button to locate. From this video, you can see that after logging on to our home page, you can click the trade button and there are 3 options to choose from. Normally, you can find the Fibonacci retracement level tools in both spot trading and margin trading. After clicking either of them, you will be redirected to the trading interface. On the left side of this interface, you will see there is a set of auxiliary tools from top to bottom, and you will find the Fibonacci retracement tools in the 3rd button. After clicking the Fibonacci retracement, you need to identify the primary trend and the starting point. Let's assume that the starting point is the high point and click that point. Then you can find the end point, which is the low point. In this way, you will find there is a set of numbers showing on the left side. These are different Fibonacci retracement levels, and what you should do next is to find the 0.382, 0.5, and 0.618, since the entry price may be showing between 0.382 and 0.618. In order to make it easier for you to identify the retracement, I lengthen the low point horizontally, and voila, you will see that the real retracement is just around the 0.5. I didn't click any points of any tails in one candlestick. This is because that, as I mentioned before, the real body is more important than tails, and the volatility of cryptocurrency is really high. Next, I will give you some trading tips when you find yourself in bear market. Firstly, you should always be aware of reversal signals, since they are very important signals that the market trend is changing. Secondly, before you enter the market, as I mentioned before, you should always set up your expected loss, since this will, to a great extent, protect your investment. Thirdly, I really recommend you guys to set up your maximum loss for different time durations. For example, if you plan to trade in 1 month, you can set up your total loss is 10% of the total investment. And if your total loss is 10%, you can just quit trading and learn for the rest of the month. You can start trading in the next month again. At the end of this video, I will summarize this content. We have learned 4 different Fibonacci retracement levels. They are 0.236, 0.382, 0.5, and 0.618. They have different meanings, but only 3 of them are very important. They are 0.382, 0.5, and 0.618. And we also learned how to use it in KuCoin trading platform. And I really recommend you guys to practice it, since you can use it in a practical way. At last, I have given you 3 trading tips. Please remember that. Respect the market, since it won't follow anyone's will. This is the end of today's video. If you have some suggestions, please give us some comments and we will measure our video contents. In the next session, we will start to learn some indicators such as moving average. Happy learning and happy trading with KuCoin. Hi everyone, welcome back to the world of technical analysis. In last video, we discussed using the moving average to trade with the KuCoin trading interface. In this video, we will discuss a new term, the Relative Strength Index, RSI, which can predict the market sentiment. Subscribe to our KuCoin YouTube channel and smash the bell button to follow our future updates. So let's find out. So let's look at today's table of content. We will discuss 3 topics. Firstly, I will give you a brief introduction of Relative Strength Index, RSI. Then, I will tell you how to understand this new term, since there are many ways to interpret the RSI, but only 3 aspects of RSI are very important in terms of crypto trading. Finally, in the end, I will show you how to apply this indicator to the KuCoin trading interface. So what is relative strength index? Normally, it is a commonly used indicator. Many technical traders use it, no matter if it is in a stock exchange or forex. Theoretically, it is a momentum indicator which can show the price's acceleration. However, to me, it is just an index which can predict market sentiment. RSI can show the price's degree of change. If the primary trend is bullish, we can know how fast this bullish trend will proceed. Also, with the help of RSI, we can figure out two extreme cases during the crypto trading: overbought and oversold. These two new terms are very accessible to understand. Overbought is the hint to sell and oversold is a signal to buy. We will discuss these two in detail in the next slide. Last, RSI can explain the divergence between the prices and RSI itself, which is important since it is related to the trade. And what does this relative strength index tell us about crypto trading? In this part, we will only focus on three domains: overbought, oversold, and the divergence between the prices and the RSI itself. Let's first talk about overbought. There are two important data in the relative strength index. One is 30, the other is 70. It won't bother you to know how these data are calculated. You just need to figure out that when the RSI rises above the 70, the price is under the condition of overbought. Normally, this signal appears near the high point in the primary trend, so you can see that many technical traders short near the signal overbought. However, it is not sensible to enter the market each time this signal shows. Considering this signal, you'd better identify more reliable reversal market signals which we have discussed before. In addition, if the RSI drops below the 30, price is under the condition of oversold. Normally, it is always shown near the low points in the primary trend, and it can be regarded as the hint to call. However, we need to be more cautious since this signal can be white noise without reliable reversal market signals. Last, typically, the trend of RSI looks like the primary trend. However, with certain conditions, the trend of RSI will move into different directions. It is extremely important since this phenomenon is called the divergence between the prices and RSIs, and the trend will, to a great extent, switch. It is because that the speed of price has decreased. This slide will discuss how to apply relative strength index to the KuCoin trading interface. Let's look at the popular trading pair Luna versus USDT. As Luna 2.0 was listed not long ago, so let's look at the 30-minute trading period. First, you need to find the indicators button, and you will find the button called momentum on the left side of this panel. And you click the relative strength index on the right side. As I mentioned before, you have to edit the format of this RSI indicator, and voila, you will see two dotted lines in the RSI chart, and the time frame of this chart is 14. So let's take a part of this trend, and the price goes down when the trend of RSI drops. If the RSI falls below 30, the price will drop, which is a suitable point to enter the market. In contrast, if the RSI increases above the 70, the price shoots high, suitable to short. In addition, when we take a glance at the low point, and you will find that the RSI start to increase when the price was still at a low level. This phenomenon is divergence between the price and RSI. Normally, we enter the market near this RSI signal. Before we end this video, let us briefly recap several key points we have discussed today. we discovered three main topics. Firstly, RSI is a hint to predict market sentiment and some extreme cases. In addition, we have learned that RSI can predict several reversal market signals by overbought, oversold, and the divergence between the prices and RSI itself. Last, we can use our KuCoin trading interface to trade by using RSI indicator. That is all for today's video. If you have some questions about this content, please give some comments through YouTube, Twitter, or Telegram. In the next session, we will talk about another RSI indicator called Stochastic RSI. Happy learning and happy trading with KuCoin. Bye!
Hi everyone! Last video taught us some trading skills for short trading periods. We also discussed about the Relative Strength Index RSI, which introduced some new terms such as overbought and oversold. Now for today's video, I will introduce a new indicator called Stochastic RSI. This index will precisely point out the potential trading opportunities. Subscribe to our KuCoin YouTube channel and smash that bell button. Let's find out. Now let's first take a look at today's table of content, in which we will discuss three topics. First, I will provide a brief definition of stochastic RSI to you. Next, we will figure out how this new indicator can help us in crypto trading. Lastly, we will apply this new RSI to the KuCoin trading interface. So what is stochastic RSI? As the name suggests, stochastic RSI has many similarities as the RSI itself. Stochastic RSI is also a predictive movement indicator, which can measure the price movement acceleration, but it is more sensitive. In addition, as the stochastic RSI is a sensitive market indicator, it is suitable for short trading periods. Also, stochastic RSI can reveal two extreme cases as the RSI does, overbought and oversold. Moreover, stochastic RSI can also explain the divergence between the prices and the stochastic RSI itself, which we have mentioned in the last video. Since we have known that stochastic RSI is similar to RSI itself, so what else does this new term can tell us? We will have four aspects here in this slide. Firstly, stochastic RSI has different standards in terms of overbought and oversold. There are also two dotted lines in the chart of stochastic RSI, but with different number of 80 and 20, which means that if the index goes up above the 80, one certain crypto is under the condition of overbought. Also, if the index falls below the 20, this crypto is in the condition of being oversold. We have learned that overbought can be a hint on short, and oversold can be used as a core market signals, but with the premise that we have determined definite reversal market signals. In addition, stochastic RSI consists of two lines, person K and person D. It is unnecessary to figure out what they are and how they are calculated. It is a mathematician's business. The only thing we need to know is about how to use it. In the next slide, we will figure out how to use a crossover as a tool to figure out potential trading opportunities with the help of KuCoin trading system. From this video, you are directed to the KuCoin trading interface. As Bitcoin drops abnormally these days, I will use it as an example to help you save your investment and find the potential short opportunities. Please click the indicators button and find the momentum button on the left side of this panel. You will find that stochastic RSI is under the RSI indicator. Then you will get a chart with the combination of person K and person D. To easily find crossover, I highly recommend you guys to edit the format of this chart. It is because the chart in the default mode is unclear. After editing the format of this chart, you will find that the person K is more sensitive than person D, which means that the line person K will move in advance of person D. When the person K falls through the person D and starts to cross the person D again, it is called trading opportunity. When the person K goes up through the person D and began to cross the person D again, it is a short trading opportunity. You will find that the high points are shown in the overbought zone where the index is over 80, and the low points are located in the oversold zone where the index is less than 20. Don't forget to identify the reversal market signals before you enter the market. Before we end this video, let us have a quick recap. We have discussed three things. First, stochastic RSI, like RSI, is both a hint of market sentiment and indicates two extreme cases, overbought and oversold. However, stochastic RSI has the different standards for the overbought and oversold. It also provides two crossover for us to indicate potential trading opportunities. Lastly, we have learned to apply it to the KuCoin trading interface. That is all for today's video. In the next session, we will learn another indicator called MACD, which is commonly used in stock exchange. Please comment on today's content. Happy learning and happy trading with KuCoin. See you next time.
Hello guys, in the last video we have talked about the trading strategy in consolidation. This tactic will help you to gain the short-term trading profits. In today's video, we will discuss the most reputed efficient TA indicator, parabolic SAR. Subscribe to our KuCoin YouTube channel and don't forget to smash that bell button to follow our future updates. Before we begin today's video, let's look at the table of content. As usual, we will focus on three areas. The first is to discover the meaning of parabolic SAR. Then, we will use our KuCoin trading system to try using this indicator. Last, I will support you with practical technical strategies by analyzing Bitcoin's quotation. Parabolic SAR is the abbreviation of parabolic stop and reverse. As the name suggests, parabolic SAR has two functions of revealing the stop of the current market trend and the reverse for the future market trend. In addition, the reason why we define parabolic SAR as the most efficient and technical indicator is that it performs best in primary trend. Specifically, parabolic SAR can give you the stop-loss price and a breakout trading entry price. We will discuss it in detail in next slide. Instead, parabolic SAR is invalid in consolidation. Let's watch this video. I will clarify this indicator by showing the chart. Seeing BTC quotation, you will find the parabolic SAR is in the momentum series indicators and apply it to the candlestick chart of BTC. After editing the color of parabolic SAR chart, you will see a series of points moving around the candlestick chart. Sometimes a dotted line is below the candlestick chart and sometimes the dotted line is just above the candlestick chart, which is how the parabolic SAR shows the stop and the reverse of the current market trend. Normally, this would be a bullish trend if the dotted line is below the candlestick chart. However, if the dotted line is above the candlestick chart, it would be a bearish trend. In this way, the end of dotted line below the candlestick chart is a stop to bullish trend. Instead, the end of dotted line above the candlestick chart is a stop to bearish trend. Also, the start of the dotted line above or below the candlestick chart would be a switch of current market trend. Moreover, distance between the dotted line and the candlestick chart can show the possibility of switching. The closer the dotted line and the candlestick chart will become, the higher possibly the current market trend will change. So let us discuss about the strategies that we can use from parabolic SAR. Firstly, as parabolic SAR is inefficient in consolidation, so we must identify the primary trend by using the moving average cross. all the high points and low points from Dow theory that we have talked about before. In addition, I intend to bring you two strategies in terms of the stop price and the reverse entry price. For the stop price, if we have defined one trend, let's say bullish trend, then we will find that the distance between the dotted line and the candlestick chart is deteriorated. Then the last point of the dotted line is the stop price to take the profits. For the reverse entry price, normally the switch point of the dotted line is the reverse entry price. However, you can never enter the market at the optimum price. In this way, I recommend you that enter the market by the close price of the target candlestick. What is more, if you enter the market by mistakenly analyzing the market trend, my advice for this situation is to set the reverse as the stop loss price, or as we mentioned before, the close price of the former candlestick. Now we can roughly calculate how many market movement we can grab. We can clearly see a high possibility of winning from this 2 months. Now before we end this video, I intend to make a quick recap. From this video, we have figured out 3 topics. Firstly, we have talked about the definition of parabolic SCR and its 2 functions. Then we have discussed these Newton's advantages and disadvantages. Afterward, we have applied this Newton to the KuCoin trading interface to practice 2 strategies to call or to short. We also talked about to set stop loss price if we unfortunately encounter the consolidation. Now that is all for today's video. Please give us some comments if you have different ideas about today's content. We will come back to analyze candlestick patterns in the next session, but in a whole figure. Happy learning and trading in KuCoin. See you next time.